We'll go ahead and get going. And as always, the content of this presentation is proprietary and confidential information of HomeXpress Mortgage Corp. It is not intended to be distributed to third parties not participating in this webinar without the written consent of HomeXpress Mortgage Corp. So thank you so much for your understanding in that. I'd like to welcome and meet our presenters. We've got Mr. Ray Menina, who we see you on camera now, so this is wonderful. Thanks for joining. Again, my name is Andrea Formato. I'm the sales training manager, and we've got Mr. David Greider, who's our SVP of wholesale lending. But Ray, I'll open it up to you. You are our SVP of strategic initiatives. I'll let you say a few words and then turn it over to Mr. Greider.
Great. Thank you very much, Andrea, and welcome to our monthly webinar series. So we began these webinars last year as a service to the broker community as we saw increased demand for knowledge with non-QM products. Non-QM stands for non-qualified mortgage, and it encompasses products that fit outside of the typical conventional and government lending standards. These loans are originated and purchased in the private market, which avoids the stringent and many times over-restricting criteria of agency guidelines. Its popularity continues to grow as it's been a major factor in fostering the American dream and is widely accepted as playing a key role in the future of the U.S. housing market. HomeXpress started in 2015 as a specialized non-QM wholesale lender dedicated to serving mortgage brokers. The company was founded by seasoned executives led by our CEO and president, Kyle Walker. Our team truly understands non-traditional lending, and we are committed to serving borrowers who may have unique situations that prevent them from qualifying with mainstream guidelines. And we've evolved into one of the top non-QM lenders due to our Make Sense underwriting approach, our industry-leading pull-through ratio, and our focus on speed, ease, and convenience. So our SVP of wholesale lending and industry veteran, David Greider, will guide you through our topic today of the HomeXpress story. And he'll also provide you some important characteristics of non-QM loans so it can help you increase your business. With that, David Greider.
Hey, thank you, Ray. Thank you, Andrea. I think we'll begin here. Industry veteran, yeah, if you can tell I have no hair, that means I've been in the mortgage industry over 30 years. So thank you for that. Kind of our agenda today is kind of went through the welcome. I'm going to go through kind of the HomeXpress story. And we've had a lot of webinars, as Ray kind of pointed out, throughout the last 14 to 16 months. Some are specialized on products or programs or self-employed investment. Some of the unique ways you can meet ATR where using assets. And then I started looking at the last 6 months and coming into here, even more recently, where some lenders say, hey, maybe I shouldn't do non-QM, or they halted for a bit because of some market conditions. And I thought it'd be important to go through the HomeXpress story, kind of tell you kind of who we are, how we got to where, and why our company is around and is going to be around in the future. And then the next topic that, we will come with that with the non-QM industry today. And then looking into 2023, right, and beyond, right? And then go, why HomeXpress? Why we could be your trusted partner. I'm going to do brief on the programs and then take any question you guys have, whether it be industry related, programs, products, scenarios you can put in the chat, which I welcome you to do. So there's a chat button down below where you can put in questions as we go. And if we have a lot, just let me know, and maybe you have to answer them individually at the end. And then we'll give you some of our key contact information. Now, this recording, this webinar is being recorded, and everybody that's registered for this webinar will get a copy of this information. So with that, let's go into the kind of the HomeXpress story and the kind of the history. And so we'll start with the first one. We were founded. I already said, 2015. But that's not necessarily accurate. That's when our company got registered as a C Corp and that kind of stuff. But it actually started probably a year or so earlier. Well, what do you mean? Well, it takes a while to form a company, get everything lined, get your capital lined up. But that's kind of the official date of saying, hey, HomeXpress Mortgage Corp was officially a company, even though there's so much that went behind the scenes, right? As far as myself, I was looking at, non-QM during this 13-14, the rules of Dodd-Frank came out. And there was a lot of need in the market I've seen through the kind of the mortgage crash or meltdown through this period, whereas a lot of great borrowers that had a lot of write-offs on their tax returns, or just didn't qualify for one reason or the other, but they were a good borrower, they're going to make their payments on time, and were a good risk to lend on, and they just couldn't get a loan except for private money. So we fulfill a real genuine need that started out way back, when there was only lending was government or agency. And now we got some different, more private, even though these are all generally go to the bond market by rating agencies and all that. And most of these are AAA bonds just because of the criteria. But we were one of the first, when you look at this, to start out non-QM and build that track record with investors and bondholders that, hey, this is a great product, and it's a great product and beyond. So I started here the first part of 2016. And in March, we're able to take our first submission in. Again, you're looking at from October to March. I mean, there's a lot of systems that go into an LOS system that we get from the loan from the broker community in. How do you disclose it, right? Making sure loan documents look correct. Our lines are all set up properly. We're able to fund every loan on time. So that's kind of our first spot we're able to take in. Then in April, of course, that takes about 20, 30 days, might even be 40 days back then going through loans, but we funded our first loan in April 2016. All right, and then, we about doubled every year through this process. So 2016, we'll just call it 50 million to 100 million, 200 million, 3 million, probably a little bit more than that, all the way in through to 2019, when we funded $1 billion of non-QM loans, which is a great year, right? And during this process, we decided to make it a little bit easier to do business in a non-QM. Before, it was like you had to email everything in and do all this, and there wasn't as much transparency without a phone call or emails, but we launched our XConnect portal and brought some technology into it. What do you mean by that? Well, you as a approved broker or loan officer in one of our approved brokers can actually price your own loan. You can upload documents. You can see the whole life of the loan 24/7. You're able to upload your conditions safely and securely that way. And in our registration system, you can load the MISMO credits. You don't have to email all this non-public information to everybody. So we try to make it really safe for you and really transparent on our end, and you can watch the whole process. Then, then 2020 happened, right? Everybody kind of remembers when COVID kind of hit. And I remember back in the early part of March of 2020, we're sitting there doing a strategic meeting of, hey, how does 2020 look? I mean, programs, everybody's more comfortable with non-QM at the time. And gosh, by the end of March, there was no real buyers in the secondary markets for non-QM loans. It's more private. It's not an agency or government type of thing. And so we decided at that time, this is a good business. It's been profitable. We know this business is going to continue for a while. We decided to keep all our employees, right? We didn't lay off anybody. And we decided to open up our Tampa location, which I'm actually in today, right? So we're actually expanding there in this period to get ready to help be better efficient and have better customer service for our East Coast partners that we have. So we have a nice Tampa office to take on, be in the same time zone as our East Coast partners. Then in 2020, we also came out with the income desk. This is going to allow you with our AEs to upload bank statements, right? Because part of the thing was, hey, what income can I use? Well, we're going to let you know up front, right? So you can upload your bank statements. We have a simple kind of self-employed questionnaire to understand the business, apply the appropriate expense factor to that, and provide that data for you. So, excuse me, when your borrower needs to go shop around, you're dealing with a real estate agent, you know kind of what the loan is going to look like, and it does qualify. So you can do that without, having the property picked out. So that's the service we provide, right? Then during this period of it was almost 3 months of right now, we came back out in June, one of the first to reopen a non-QM with non-QM 2.0. During that time, all our borrowers that we had paid us. We did a securitization with our parent company, Sear Capital. And so when we came back in June, Here's what happened. We had no loans because, you know, that 90 days didn't have any submissions. We had nothing on our lines, but we had a full staff of great knowledgeable individuals from AEs to underwriters, account managers set up, ready to take on that loan. And that actually put us in a position to really grab some market share and be there right away available for our existing broker partners. And that carried us through, you know, all the way through this. We all know 2021 is a great year, but we continue to go forward and grow. So in October, we launched FHA. They go, well, aren't you non-QM? Yes, we are non-QM, but I'm telling you why FHA is a good kind of partner as non-QM. Non-QM is really manual underwriting of loans. They're all manual underwrites. And we feel like FHA can match pretty well with our credit expertise. That means we will take the manual underwrites. In fact, that's kind of what we're looking for marketing, right? Is the loans you can't get done internally or through your normal sources in-house, you have an avenue. And that's what non-QM it really is. And why HomeXpress is out there is because where you're sitting at with your in-house lending or your go-to, maybe it's Rocky, UWM, whatever it is, not all your borrowers fit that box. What are you going to do with those, right? And you know you're looking at, this is a great loan, right? And I remember when I first started, this was like 2016, maybe early 2017, I was talking to a loan officer, I think it was out of Florida somewhere, and he came, was at a bank, then went open a shop. I go, why did you leave the bank? Just a conversation. Here's why he left. He had the borrower come in as self-employed for like 10 years, wanted to get $1 million loan to purchase his house, and he couldn't do it. I go, well, tell me about why this really kind of made you move into the broker world. Well, this borrower, tax returns didn't work, right? But he had huge deposits and had $5.5 million in savings at this bank, and they wouldn't make the loan. And we're going, that fits non-QM. That's a typical non-QM borrower where the bank said no, and the rates, yes, might be 100 basis points or 150 basis over the prime rates on Freddie or Fannie, but this is his need. And he was educated enough, no, I have write-offs. This is the way I do things. It saves me more money in the long run going this way. So that's a typical one and why non-QM expanded, right? And we also seen in the investor world, I mean, there's so many loans when we first came out with some of these better investment products, called better, kind of easier to get done. And you can do bank statements or DSCR. And the first ones we're getting in, I was looking at some of these loans, I'm going, wow, so you have a private party loan, and I looked at it, and you're paying 14% interest, you have a balloon on it, and we don't have, and you've got charged points on it, right, from that private party. Yes. And it comes over here, we save them a lot of money. So there is, and there still is today, a lot of those borrowers available that need a good non-QM home. So to kind of wrap up 2021, and it's going to get surprised as you go through this, right? 2021, everybody had a great year in the mortgage business, right? We funded nearly $2 billion in 2021, which is a great year. Then that leads us up to this year, which I'm going to go a little more detail on some other slides. But look at those numbers. We funded $1.7 billion through November with a month to go. Now, I don't know how many mortgage or even wholesale companies out there say, hey, we're going to be fairly flat year over year from 21 to 22. We've been really flat, right? Really flat on volume. So you can see where demand has gone down probably in the last 4 to 5 months, more so than it did previous year. But overall, it's been flat. And I actually think it's going to be flat next year too, even though the first quarter might be low. We'll get more into that. And we're still adding more programs for you, right? So in October, we added VA. Again, VA kind of with FHA, and we're a fully approved HUD lender. It kind of matches up to that manual underwriting, credit experts, and we have that. All our underwriters are manual underwriting experts. Our AEs are trained on these things. And so they're going to be able to help you out on what you can't get done through your traditional sources. We added 5 to 8 unit DSCR and Freddie Mac as well. Then one of the things is we love our culture. We were in October this year, we're actually voted most loved employer, which is a great recognition. I always say that I get called on this. We have a great work family here. If anybody haven't experienced it, I get experience alone with us. Everybody's responsive. We're going to try every way to get that deal funded and funded on time. Then this month, what we added, right? So keep on adding. It's like we understand when we're talking to our broker partners and some of our account executives and some of our underwriters as well, that they're tougher deals out there. I don't want you to be scared of those tougher deals. That's where we're the experts of. So we added in a loan scenario review type of committee. I'm part of that, plus our VP of credit, some of our senior VP levels. We want to look at your deal, and this could be before you sub it. Just give us some characteristics, maybe the Mismo credit through the portal system, so we're not sending all this stuff out, and we can give you a good idea of what that loan can do or what we can do for you to help you out. So we're here to help you close more loans that you can't get done through traditional sources. So non-QM is today. Remember, I talked about this year, and then this kind of goes into what happened this year and how we at HomeXpress kind of manage this, right? So Q1 and Q2, rapid increases, right? In fact, it was historic as far as the increase in rates of how fast they went. So we saw frequent rate changes. Some lenders did not honor locks. I mean, competition, some of them didn't make it through that because they couldn't get the loan sold fast enough or undercapitalized. Not only have the rate aspect, but the spreads widened as well. What I mean by that is that, okay, one's the rate aspect, but if they're anticipating increased rates over time, that spread, they're already building in what that rate's going to be later on. And we saw several lenders not able to continue their operations, unfortunately. Q3, kind of similar the same, but I look at Q3, we had a few others that say, hey, we're going to take a pause and hey, we're going to gracefully back out, which is probably good. They hopefully honored all the locks and files there. But I saw something where rates started to stabilize. I think they're already kind of built in what the Feds are doing. And so we had a little up and down through Q3 of some contraction on some guidelines, maybe some rates went up a little bit. I actually saw we expanded a little bit and rates went down. I think we had a little rate reduction Friday, and I think we're anticipating maybe an 8 lower in certain bands coming forward. More to come on that because it's still kind of volatile out there, but we do see it stabilizing. The other thing we have coming into Q3, Q4, maybe in the first part of that is some of the HBA concerns, more specifically geographically with certain MSAs. I saw on the news, it's like, hey, I saw something from our Vice President of Credit on Black Knight saying like 8% of the borrowers that got purchases in 2022, according to Black Knight, were now kind of underwater. And that'd be the ones putting probably the FHA or minimal down, right? And non-QM is one where you do have a little bit more down payment. And believe it or not, the credit scores are great. These are actually real good borrowers. And so they actually perform very well. So there might be some areas where, hey, we got a 90% max LTV in our Primex. That's for, better credit score with reserves. In certain areas that might be at max 85 based on the MSA or areas they're in. So they're still good borrowers as far as investors and the rating agencies. They probably like to have a little bit lower LTV protection on that. And we go into Q4. I see, I talk to a lot of broker partners of ours, and they say they have fewer applicants. So that's due to home affordability. I think there's some seasonality with it. We all know that holiday time through January typically is a slower month in the mortgage market. And inflation has taken a toll on a few borrowers, right? So if you're looking at qualified at 4% and the rates go to 8%, it's going to take a few people out of there, right? But we do have some stabilization I've seen. I think the 10-year, has gone down decent enough right now this month. We'll see how it goes in the meeting next week with the Feds, and then into next year, right? I do think we'll see more stabilization, which is a good thing. So as you're looking forward, as we look at 2023, there's lots of positives. I have a lot of optimistics to it. But I want to talk about how we managed all these things in 2022, right? And beginning of January, we saw that, or maybe it was end of December, we made a decision as a company to say, you know what, let's not carry a big balance sheet of loans, right? Let's sell them more quickly than normally we have. And so we did that. So we didn't carry a big balance sheet. So loans that got made every 2 weeks, we were selling them off to, whatever investors are thinking to go into securitizations or might hold them, right? We implemented hedging, right? A program. And not every non-QM company had the capital market department to do that. What does that lay us to do? We had brought in some certainty with a profit on loans. So if our loans over 2-3 weeks, rates were just going skyrocket. Okay, we could hedge that and still say, okay, we're going to be okay, right? The other thing I put on here too is 10% of our own money on loans done. And it was kind of surprising because we historically have done that. Then I saw a few articles where a lot of companies were only putting in 1% of their money, 99% on the lines. And I go, that's not us. We're a little bit more conservative. We want to be a great partner with everybody in this mortgage industry that we deal with. And that, first of all, it's our customers, which is our broker partners. And internally, make sure we have a good culture here. Our lines feel protected, that they know that we know what we're doing, and we got vested interest in everything. And then to our bondholders or ultimate investors that rely on that interest income from the mortgage payments, that they're good quality loans, right? Meaning they're vetted out through the manual and right price that, hey, it's going to pay us back, right? That's really what it is. They're going to make that interest payment and the mortgage payment to the interest payment to that bondholders on a regular basis. And that has happened. We built that track record out there. We also implemented some forwards because some of the companies came to us, we like your loans, all that, and we'll buy your loans in the future. So we put in some certainty right there. We've also retained large capital reserves, right? And we honor locks for this whole process by doing this, right? And I'm proud to say that, a dollar's profit, but we have been profitable every quarter this year. And that will be including this quarter's at Q4. I don't think a lot can say that, but we took some strategies, probably a little more conservative than others. We had records in March and April this year. Maybe we didn't. We're selling loans or move rates up. So if funded in the lock period, great. Loans that came in had a different rate as we're going forward this year. But it puts us in a spot where we're going into 2023 of lots of great things we can do for you, and we're going to be here today, tomorrow, and beyond, right? So here's my opinion of going into 2023, right? So it's not the company, it's just me speaking. I think Q1 is going to be challenging, right? We still got some uncertainty of the Fed meeting. I think it's going to be a 50 basis point increase. I think they're really going to slow it down, but I think we'll still have a lower mortgage demand and ultimately volume in Q1 than historically last few years we've seen. But I do believe rates are built in, right? And they'll maintain in a smaller range. You won't see these big ups and downs, right? It might be an eighth or a quarter, that kind of stuff. And then we'll get to Q2, Q3, and Q4. I think actually rates will decrease some. I don't think it's go down. I think there's going to be a certain amount of rate that's going to be there, but it will stabilize. So everybody kind of will know, and they're kind of be used to, hey, this is a market that we're in right now. But I'm very optimistic when you get to the middle of next year and the last half of next year that, the volume's going to be a lot better for you and our industry as a whole. So let's go a little bit of HomeXpress, right? Kind of a little nice slide here by marketing. Wholesale non-QM experience, and I look at why Express. It's not like we just started this company. Hey, we want non-QM loans, or traditional. Hey, we do agency and government loans. Oh, we want to get a non-QM. No, we started out with non-QM, right? This is what we do, right? So you can know we have the experience and the history of doing it. We're well capitalized. It's not like, hey, we're not going to be able to fund your loan today. We have to wait till line clears. That's not for that. We have enough money to fund on our own with our own money. Strong balance sheet, right? Our reputation performance, right? We have that with our broker partners, with our lines, and ultimately, what's important is investors and bondholders, right? We continually have one of the highest pull-through in the industry. And again, we're primarily a wholesale non-QM lender. I look at that, we're credit experts. That's what we can bring in the manual underwrites on the government, right? So we have scale and financial strength and great executive leadership with this company. So I'll go into our commitment to you before I go into some of the programs. And you guys can chat. If you got different programs you want to ask questions, or please put those into the chat. We're committed to great competitive pricing and programs. And I've talked to a lot of people in our industry, especially more every day, because there's some companies that have laid off and they're calling me looking for maybe a potential position. And I'm asking them, they did a competitive analysis and they go, man, your rates and programs are great. Yeah, that's something we look at every week to try to make sure we provide the best pricing and programs available to our broker partners, right? The other thing too is highly trained account executives. It's not like we say, here's a phone and go start calling broker. No, you can't do that yet. You're gonna have 2 full weeks of training, right? And I know you probably have past experience with that. And then we do ongoing weekly training on a lot of topics. You know, a lot of it's based on credit, expertise, right? So how do you look at loans, right? Does this deal make sense? Because we're a make sense lender. Tell us the story. Does it make sense? Whatever problems they have, is it solved? And we get them back on our feet, and it's just being turned down because some guidelines by agency and government lending doesn't fit their box, right? You can bring those to us. So we love the loan stories, right? We're responsive and transparent. You're not gonna have to wait around for us to call you back, or we generally pick up the phone or answer the phone right there. Our transparency is really by our technology, right? You wanna know what our SLA is in or how long our underwriting period, we can send you that right now today. And if you have our XNet portal and you're signed up with us, you can price deals, you can see the whole loan, all the conditions, the notes by the underwriter. So we try to be transparent with you through this process all the time. Again, we honor locks, we have great turn times. We're committed to close your purchase on time. And this is a purchase market, so that's kind of what I put on there. All our loans might close on time, but it's somewhere around 65 to 70 last few months has been purchase transactions. Solutions, again, we talked about that, why programs. So we have the solutions for your self-employed that don't want your tax returns, right? We do have 1 year full doc, maybe 1 year tax return work. Great on bank statements. Again, we have the income desk, so you can know that up front. We have great investor programs. If you want to see some of our webinars we've had on those, please go to our website. Some of those are recorded on specific programs, but I'll take questions on that. We both have the DSCR, and you can do these investor programs all doc, and you get a little bit better rates on that. And then the FHA and VA manual underwrites that are available. So check us out. If you're not happy with some of the manual underwriting companies out there, you want to explore that, check out our service. We're hands-on. Our underwriters on this will call you back on FHA and VA and really try to make your loan work. And our pricing right now is pretty good on the FHA and VA. So with that, Andrea, I've just got a little sheet. Now this was busy. No, the reason I put on our programs and some of the things that highlights on them, we're going to send you this deck, right? And so let's say, hey, where are you at today? Now this can change as we expand some of our products and credit criteria. It may contract from time to time because of the volatility. But this tells you kind of where we're at today on programs. So I'm not going to go through all this, but it's there for you as we send the deck out to you. And I think we're kind of up to the questions now. So Andrea, you can unmute. Maybe you can take some of the questions that come in.
Yes, I'm here, David. Thank you. Excellent. So yeah, we had a couple of the questions come to me. Are you doing DSCR loans below 1%?
Great question. The answer to that is yes. We do require at least a 0.75 or greater. So we do DSCRs below 1. Again, there's a little rate add if the rate's better if you're 1 to 1 or above 1 1/4, the rate's even better. But we do those. And there's, when you qualify on, especially on a purchase at 1007 or 1025, at times it's not caught up to the market. We understand that. And so we're able to do that maybe at a little lower reduction on LTV and a little pricing ad for that risk of it not cash flowing over the PITIA.
Excellent, thank you. So one came in, how are our turn times currently?
24 to 48 hours across the board, right? So when I look and I say 24, a real, kind of a more easier, we'll call it a DSCR that is, we're always gonna be 1-on-1, that's probably 24 hours. If you're getting $1.5 million, $2 million loan in, bank statements may have some issues on, might take 2 days. But we're across that through the whole process. It's 24 to 48 hours.
Awesome, thank you. One came in, can you go into just a little bit more detail about the new loan scenario review committee that you had talked about?
Yeah, this is really, you're going to get together with your AE. The AE is really good in shopping, but they might say, hey, you know what, this loan has merits, doesn't quite fit the guidelines. Again, we're a true lender, meaning we underwrite to our guidelines, we fund with our own money, and we're able to make exceptions when it's warranted, right? And so this is what it's about. You're going to get together AE. We can do it without submitting the file through the registration system, upload the MISMO and the credit into the portal, right? Get to the AE, let's go a sheet down, kind of let's go through this loan and see if this makes sense. And then it'll go to kind of a loan committee type of scenario with credit experts on it. And we're going to get back to, hey, this loan we can do. Here's some of the conditions that will make this deal work. Or maybe you needed a different LTV. Maybe we can find a different way to do the loan for you. And this is all about, hey, just if you got a tough scenario, and I know there's less applicants out there where you don't have to automatically say no or maybe not no. Call your account executive at HomeXpress. Let's get this in here and let's look at ways to do this loan. And that's what it's about, right? So your AE is gonna be really strong. I kind of understand what we do through the guidelines of what normal exceptions we do all day long, but you're gonna have deals out there that might be a little more challenging, or you might say, I don't know what to do with the deal, right? But I got to borrow and has that kind of makes sense. Let's take a look at that, right? And for example, I had one yesterday come to me from a loan officer on the East Coast, and his scenario was, man, the servicer messed up, and what we can go through all that, but actually had a 1/90 the last 12 months. But I started looking at, he started looking at credit history. It's kind of a isolated event, right? Well, and actually we could go full doc and had like 30-35% down, right? Normally say, hey, I can't do that. I whatever, it couldn't find a place for it. No, let's take a look at that deal. That's something we want to look at. Don't automatically say no to those deals. Let's get those in and take a look at them. And that's what it's for. So we say, yeah, that's an exception we can do.
Excellent, thank you. Here's one. Do we offer any programs for borrowers that are self-employed less than 2 years?
Great question. Now, I saw some marketing by some company. Hey, this is a big deal. We can do self-employed at 1 year. But why is that a big deal? Well, I mean, because we've had this program for like 4 or 5 years, where if it's in a managerial position, supervisor position, same industry, and they go self-employed at least 1 year, but less than 2, we can look at those deals. That's always been a program here for the last 4 or 5 years at HomeXpress. So the answer is yes. Now, we're going to take a borrower that was doing something totally unrelated and then start a new business doing something else. No, those are a little bit more challenging. But if it's in the same line of work, absolutely, we want to look at those loans.
Great, thank you. Can HomeXpress finance broker points without raising the rate for LTV?
Yes, to certain LTVs. This is one of those contractions that you had mainly because of HPA concerns by some of the rating agencies. So typically in the past, we can go to 80% LTV on a consumer purpose and finance points to get the low rate, or the broker fees on top, and you get the same rate at 80, even though the real LTV is 81.6. We've actually had to cut those back 5% on LTV just because the rating agencies have put a higher risk. So the rate jump from 80 to 85 is larger, and on your investment property 70, 75 to that 80 is a little bit more steeper. So yes, and your AEs will go over that with you, so you can get that same rate, and we can finance points to get a lower rate, or the broker fees on top of that. That means less money down for your purchaser, right? And that's what it's about, trying to give options for that borrower to get into that home, buy that investment property with maybe less money down, and help save deals that way.
Excellent. That was it, David.
Oh, awesome. Well, thank you.
I think we're going to turn it over to Ray to kind of wrap it up here.
Yes, thank you very much. And thank you, David. As mentioned earlier, these webinars are recurring with topics that change each month. Our next webinar will be presented on January 12th, and our topic will be increasing your volume in 2023. So you won't want to miss this one, because we're going to show you ways of how you can use non-QM products to increase your pipeline and close more loans. I'd like to thank our longstanding customers who continue to place their trust with HomeXpress. And we humbly invite those who have yet to try us to consider partnering. To learn more about HomeXpress or to view a previously recorded webinar, please visit our website at www.homexmortgage.com. And on our website as well, you can learn about how to become an approved broker with us. You can see our pricing sheet in there. There's no type of authentication that you need to do. So fully transparent, as David continuously mentions during this webinar. Our contact information is below. David Greider's email and phone number is there, and mine is there as well. So if you are uncomfortable in asking questions in this format or in this type of venue, you can always feel free to send us your question and we'll answer it promptly. Thank you very much, and we're looking forward to seeing you again next month.
Thank you, Ray. Thank you, David Greider. And thank you all for joining us. Like we mentioned, we will be sending out a copy of this recorded webinar as well as the PowerPoint in the next day or so. So please be on the lookout. If you have any questions, don't hesitate to reach out. But thank you all very, very much. I hope you all have a wonderful holiday season, and we will see you in the new year. Thanks, everyone. Bye-bye.